Well, this hasn't started trading yet, but let's help investors understand your business. You're in lending and in the data business. What's the data set that you're working with?
Sure. So we are an AI lending platform. That basically means, applying AI to the problem of consumer lending. And we do that by helping banks, originate better loans that are more accurate in terms of predicting who's likely to default. And that means using all sorts of data to have a more informed decision and one that can result in, letting banks approve, 2 to 3 times as many borrowers at the same loss rates as they would otherwise.
Well, you say all sorts of data. What kinds of data, aside from transactional data, are you talking about, and where are you getting it?
Yeah, so, the data is very broad. It certainly means all the sort of traditional data you would get from a credit report. We use hundreds and hundreds of variables there. It also can mean where somebody's employed, the industry they're in, their background with respect to education. So there's more than 1,600 variables in our model, which is fairly unprecedented in lending to use such a broad amount of data, but it gives you a much better lens onto the consumer, and in the end helps you be much more accurate in predicting if and when they may default on a loan.
That is fascinating. Where do loan officers normally have the largest blind spot? What mistakes do they normally make just from being human?
Yeah, well, a lot of times it's been digitized. It's not, historically it was somebody sitting across, at a bank, sitting across the desk from you, asking you questions. Today, most lenders have at least somewhat digitized that process, at least in the consumer lending space. But literally, they're just using a handful of variables. You can think of your credit score, maybe how many credit lines you have open, if you have any defaults or delinquencies. But, the idea of that being able to predict what's going to happen in the future in the real world is just a massive, mismatch between a very simplistic model and the real sophistication of trying to really understand what might happen to that consumer, what might happen to that loan in the coming, months and years.
So as we look at the current universe of delinquencies, charge-offs, reserves, the things that go wrong in lending, how much lower can that number potentially get?
Oh, it's incredible. One way to sort of quantify it is if you thought of a system that was completely random as 0 and a system that was kind of omniscient at 100. Our view generally is that most lending systems in the consumer world are at about 2. And we believe our system, just reasonably is at about 10. So we're 5 times, maybe 4 to 8 times more accurate than a traditional lending system, but we're only 10% towards what is theoretically possible. There's always some randomness in the world, so you can't get to 100% predictive, but we are literally just scratching the surface of what's possible with AI.
Hey, Dave, it's Deirdre. Something caught my eye in your IPO prospectus. Part of the letter says that while many fintech companies aspire to become the bank of the future, we're not one of them. Instead of competing with banks, we decide to partner with them. What are your growth opportunities? And do you think that fintech companies, I'm thinking of some of the biggest ones like Square and PayPal, do you think that they cannot displace banks in the future, or that they're trying to?
Well, certainly there's a bunch of fintechs who are becoming banks or are in the process of applying for bank charters. And it may be a great path for them. I actually think it would be great for the economy overall if there's new bank formation, which there really hasn't been in a very long time. And so that's a good trajectory. For us, we're kind of a team. A lot of us came out of Google. We see us first and foremost as a technology company aiming to help banks. And that's really the path we've chosen. We aren't applying for charter. We don't want to be a bank. But we see AI lending as one of the biggest transformations the industry will see in decades. And we really want to be the partner to banks through that transition.
And Dave, as you lean on artificial intelligence, how do you avoid market bias or discrimination? We've certainly seen that AI has had issues detecting diversity. Lending has its issues as well. So what are you doing to confront that?
Yeah, it's a great question, Deirdre. There's good reasons to be worried about AI and bias and unfairness. And, our short answer is you rigorously test for it. And our system has been designed, since the early days and in working with regulators to automatically test and make sure that we do not introduce bias or unfairness into the model in a way that would be harmful to any particular group of consumers. So that's something our model, before it will ever change or upgrade or push a new version into production, it will always test in advance and make sure that it is not biased. And we've been able to demonstrate to the CFPB, the Consumer Financial Protection Bureau, that we actually pretty dramatically reduce the price of borrowing for every demographic group out there.
All right, Dave, we do await the first trade in Upstart. Thanks for being with us.
Shepard Smith here. Thanks for watching CNBC on YouTube.